Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing a little bit of technical analysis on Bitcoin and the cryptocurrency markets, and more specifically, we're going to be doing some longer-term technical analysis on Bitcoin, because in today's video, we're going to be asking the question, what will happen to Bitcoin and the cryptocurrency markets when global stock markets inevitably enter a future downturn, enter a new recession, and a global financial crisis happens, because one is definitely going to be happening eventually. And we're going to need to know what's going to happen to Bitcoin when that happens. So in today's video, we're going to be talking about why a global financial crisis and an impending recession may be on the horizon. And we're going to be talking about what that may do to Bitcoin and the cryptocurrency markets in today's video. So if you guys enjoyed today's video, definitely consider dropping a like and hitting that subscribe button. Also make sure to smash that notification bell so you'll be updated every time a new video goes live. But without much further ado, let's go ahead and get right into it. We have a lot to talk about in today's video. I will go ahead and look at the hourly chart briefly. It looks at the time of recording this video that we may be seeing a little bit of a breakout of this long-term descending triangle pattern. Now, at the time of recording this video anyway, Bitcoin has not properly broken out. It looks like a breakout, but we haven't had some volume to confirm that. I'd like to see a nice big volume candlestick or for Bitcoin to continue moving to the upside over the next several hours. When this video goes live about 2 hours after I record it, definitely go check your charts and see if there has been a proper breakout. There's a very good chance that there has. Anyway, that was basically all I wanted to talk about with Bitcoin on the short term. Let's go ahead and look at CoinMarketCap and get an idea of what the market's doing. Litecoin is sitting up here at number 4. Litecoin's jumped 12% over the last 24 hours. You guys know I'm a big fan of Litecoin. I'm not a big investor in it right now because I don't see it doing very well at the beginning of a bull market, but after a bull market is going, I think it's going to do really, really well. Anyway, we see that there are several double-digit gainers in today's video, and the vast majority of the market is green. But short-term technical analysis is not what we're here for in today's video. We're actually here to talk about the stock markets and how they may be playing on Bitcoin. So let's go ahead and do a bit of a recap on what has happened here over the last couple of months and try to understand what is going on here on the S&P 500. If you guys are not familiar with stock markets, the S&P 500 is one of the largest ETFs on the U.S. stock exchanges. It covers 500 companies, and it is a very good way to measure what the entire stock market is doing. And as we can see here, if I can find my ruler, the stock market, the S&P 500, retraced about 20% from the span of about September all the way into December. That is rather worrying because many people in the stock market, of course, we don't talk about stocks too much on this channel, but many people in the stock market consider a bear market starting after major stock markets, or after any stock has retraced more than 20%. And as you can see from that little ruler right there, we retraced exactly 20%. And interestingly enough, the S&P 500 actually managed to bounce off of the moving average that I've been talking about a lot, which would be the 200 weekly simple moving average. Right there, we bounced straight off of it, and over the last couple of weeks, over the last 4, 5, 6 weeks, really all of 2019, excuse me, the S&P 500 has been doing very well. But interestingly enough, we actually see that the S&P 500 has bounced bearish and has gotten resistance and rejected off of the 200 daily moving average, which is really, really interesting because we bounced resistance off of the same moving average that we just bounced support off of just a couple of weeks ago. Overall, the U.S. stock markets are not looking all that great. Now, granted, this bounce that we've seen here in the beginning of 2019 looks very, very nice. And if if the S&P 500 can start moving to the upside again, get through this level of resistance, moving up here above 293 points, up above 300 points, for example, and start moving into new all-time high territory, then the bull market may still be on, and the bull run that we've seen in the stock markets and the good times here in this 2010s bull market may actually continue. But the fact of the matter is, there's a lot of things pointing towards a recession right now. And while I do want to get something out of the way very, very early on in this video, and that is that a lot of people that try and predict recessions, it's a lot harder than people will lead you to believe. It's not as easy as just saying, oh, well, the S&P 500 has been on a bull market for 10 years, ergo a recession's coming. The S&P 500 broke this one level of resistance, ergo a recession is coming, and the entire market's going to crash. Everything's going to go up in flame. There's going to be a 20% unemployment rate. The interest rate's going to go up to 15%. It's not like that. It's not that simple. But there are a lot of things that we can look at and use as signals for whether or not a recession is coming, be they corollary or causative or causal. And one of them is the federal interest rate. And I want to show you guys this. The federal interest rate is the interest rate that the Fed puts out that many other banks base their interest rates off of because they're getting money from the Fed. And as we can see right here, we give this page a little refresh, we can see the actual Federal Reserve interest rate here on this chart. We can see it moving up and down over time. We have our axis down here for time, and we have our interest rate right over here. And as you can see, if we move in here to the last 20 years or so, interest rates have been very, very low since the last recession. These little gray areas right here, this box represents recessions. And as we can see, ever since 2009, the interest rates have been on the floor. If you guys have had money in a savings account, for example, there's a reason why you haven't made any money off of that savings account from the interest rate. There's a reason why interest rates have been so low on things like mortgages. It's because of this. That's why mortgages have been around like 2.5%, 3% right now for the last 10 years or so, because federal interest rates have been so low, so bank interest rates have been so low, so you've been able to lock in 30-year fixed rate mortgages at 2.5% for the last 10 years. And as you can see here, since 2015, interest rates from the Fed have been continuing to creep up, and as Federal Reserve interest rates continue to creep up, the rest of the bank's interest rates are going to continue to creep up. And this is an extremely important chart. If you guys follow the stock market, I guarantee you have seen this chart before. You have heard people talking about this chart, and I want to explain exactly what this means and why this may mean that there's a recession coming, so that we can dive into exactly what a recession may mean for Bitcoin. If we look back out here across the entirety of the time that this chart spans, about 62 years, ever since 1954, we can see, interestingly enough, that every time Federal Reserve interest rates start going up, a recession happens. As we can see back over here, Federal Reserve interest rates, Fed interest rates were moving up in 1957, up to around 3%, a recession hit. Moving up again, a recession hit. Moving up again in the 70s, a recession hit. Moving up in the span of a recession in 73. Moving up in the late 70s, early 80s, a recession hit. Moving up in 89, and a couple years later, a recession hit. Moving up in 2000, and the 2001 recession hit. Moving up in 2006, and the 2008 financial crisis happened. So why does that happen? That is a very important trend that we must understand. Is the Fed just raising interest rates to cause recessions because the Fed hates us and wants to destroy America? Do we need to take them in front of some kind of senatorial committee for treason and have them indicted for trying to destroy the economy? No. The interesting thing about interest rates is that they have a massive impact on the market, because when you one thing that you have to understand is that when interest rates are so low as they have been over the last 10 years or so, what happens is you see inflation continues to rise. And what that means is that more money is injected into the economy, and less money, and your money means less. Your dollar is worth less. So when interest rates are too low, you see inflation rise, and that is not a good thing for the market. See Venezuela and Weimar Germany. I need to say no more. Just go back and look at what happened to them, and Zimbabwe right now, I believe. It's not a good thing for inflation to happen. I mean, I'm not getting into the inflation argument, but typically you don't want inflation to run away from you. So what the Federal Reserve will do is that they will increase interest rates to try and curtail this, and many other things that can happen when interest rates are low. I'm trying to be brief here, but the interest rates have to rise every once in a while to curtail many of the problems that you see show up in bull markets and the good times, as it were, because there are a lot of fundamentals here that have gone way out of whack in the last 10 years and really are not looking very healthy. Even though the market has done very well, there are a lot of fundamentals that have been doing very bad. For example, inflation and the interest rates have been way too low. People have been getting basically free mortgages and free loans. Money has basically been free. It's not a good thing to allow that to continue forever. So what we have to see is that the interest rates have to start climbing. But the problem with interest rates climbing is that when interest rates rise, then you see that businesses are less likely to take money out in loans, or less likely to take money for capital to be able to run their businesses, so they will retract. They will not expand as much. You will see that mortgages that are not on a fixed rate mortgage, for example, variable rate mortgages go up so that people have to spend more on their house payments. You see in general that money becomes more expensive. That's a weird way to put that, but that's the term for it. Money becomes more expensive because it's harder to take out a loan. There's less volume, there's less liquidity in the market, as it were, and overall, rising interest rates can actually be one of the things that lead to a recession. But at the same time, interest rates have to rise, or many of these other problems that they are causing will cause a recession as well. I know I've just gone into a lot of technicals. If you guys are still here, good job being a trooper, but we kind of understand now why recessions sometimes happen and why we may be seeing one come. One of the reasons is because we're seeing interest rates rise. Another one of them has to do with the fact that the U.S. stock markets have been on a bull market for 10 years. And while some people will say that just because a market's been on a bull market for 10 years doesn't necessarily mean a recession is coming, I would say that the longest bull market in the history of the stock market does increase the chance that we're going to see some kind of retracement over the next couple of years. Now, I'm not saying that we're going to see a recession that is going to see 50% of the valuation of the S&P 500 vanish in the next 18 months. I think that we're probably going to see a recession happen in the next 2 to 3 years, but I'm not going to comment on how bad this recession will be. But with all of that out of the way, let's go ahead and get into the topic of what's going to happen when Bitcoin or what's going to happen to Bitcoin when the US stock markets and global stock markets inevitably enter a recession. Recessions happen, it's a fact of life. One is going to happen eventually, and we need to know what's going to happen to Bitcoin when it does, because that's what we're here for, is cryptocurrency and Bitcoin. Now, there's two different camps that you can look into when you're talking about what a recession will do to Bitcoin. You have to realize that the last recession, we can see here on the chart, ended in 2009, right around May of 2009, this chart's showing. That's like 4 months after Bitcoin was created. So we've never really seen a recession during the time that Bitcoin has been active. We don't have historical precedent to base this off of. You have to understand that. But we do have a lot of different theory that we can apply to this and try and understand what Bitcoin is going to do when a recession happens. There's two different trains of thought, like I said. The first train of thought is that if a recession happens, then that is going to drive people out of the stock market into markets like gold and silver, because traditionally, if you look at the gold and silver charts, then you will see that when recessions happen, a lot of times valuation moves from stock markets into gold markets. And the reason for that, or at least one of the reasons for that, is because people that are worried about the stock markets crashing, they're worried about all of those fundamentals that I was talking about. Those fundamentals do not apply to gold. The Federal Reserve cannot raise interest rates on gold. That's not the way that works. The Federal Reserve cannot just go and print $1 trillion more worth of gold. That's not the way that works. Gold has a limited supply, and that's the reason I have CoinMarketCap up here, because Bitcoin does also. Right now, there's only a little over 17 million Bitcoin in existence, 17.5 million Bitcoin in existence. There's only ever going to be 21 million. There's that limited supply. There's a limited supply, meaning that the demand is what drives the price. And people like that, because when the market starts crashing, people investors, retail investors, and institutional investors try to look away from the stock markets into things that have limited supplies like gold and silver, because they tend to do better in these markets. And there's a very good argument that they're going to do the exact same thing when a global financial crisis and a U.S. stock market recession, a global stock market recession happens. There's a very good argument that they're going to move into the Bitcoin market. Now, there is that argument, but there is also the argument that I want to make, and I'm going to weigh both of these arguments at the end. There's the argument that I want to make that Bitcoin, unlike gold, is a very, very speculative investment. Bitcoin is a very young investment, and while you guys know that I have full confidence in Bitcoin myself, we have to understand that the people that may be leaving the stock market may not think the same. There's a lot of people that are very bullish on Bitcoin. There's a lot of people, a lot of investors that really do like Bitcoin, that do believe in it. But you have to realize that the people investing in the stock market and the people investing in the Bitcoin market are two completely different crowds. Now, there's a lot of overlap. I would say that there's especially a lot of overlap in the tech community. Like if you're investing in Amazon, for example, then you may be investing in Bitcoin. If you're investing in AAPL, also known as Apple, you may have heard of them, then you're probably going to be investing in Bitcoin. If you're investing in Tesla, then maybe you're going to be investing in Bitcoin. But many of the people that invest in S&P 500 stocks, those being many of the stocks, those being transportation stocks, industrial stocks, any kind of stock you can think of, they're not necessarily going to transfer their love of the stock market into a love of Bitcoin, because they don't know what Bitcoin is. One of the reasons why gold performs so well in bear markets in the stock market is because gold has been a store of value for 10,000 years. Gold has always been around. Gold has been following humanity around like a little dog trying to get food out of you for its entire existence. Gold is not something that is only 10 years old. And like I said, I have full confidence in Bitcoin, but it's not about whether or not I have confidence in Bitcoin. It's about whether the people that are going to be leaving the stock market during a recession have confidence in Bitcoin. So those are those two arguments, but let's go ahead and apply those arguments to what's going to happen to Bitcoin when this happens, because this also depends on what Bitcoin is doing at the time when the stock market crashes. There's a lot of different ways we can look at this. Let's say, for example, that the stock market enters some kind of recession and we have confirmation that a bear market is happening, be it that the S&P 500 has dropped below 20% from its all-time high. Let's say it drops down to here, like 25. We drop down to 220, 200 points, and we don't hit a new all-time high. Let's say we do something like that about a year from now, and we see that Bitcoin is just starting to move into a bull market. We see that Bitcoin is just starting to move up. The fundamentals are looking good. Maybe we have an ETF approval. ISIS backed is doing well. We see Fidelity stepping into the space. We see all these bullish things happening for Bitcoin. Bitcoin is generally starting to move up, and then all of a sudden the stock market crashes. What does that do to Bitcoin? Well, in this hypothetical, what we talked about just a second ago is very, very important. Are people going to be entering Bitcoin as a hedge against the stock market, or are people going to be avoiding Bitcoin because they don't know what it is? That is the question, and that's the question that we're going to have to try and answer here over the next year or two, because there is probably a recession coming in the next 3 years, and we're going to want to be ready for it. I personally think that we're going to see enough people come into the Bitcoin market from the stock market that there will be a net gain from the stock market crashing. And the reason I say that is because if people don't come into Bitcoin from the stock market crashing, then, well, nothing happened. We didn't see really anything happen. But if some of those people from those tech stocks, like I said, Amazon, Apple, NFLX, Netflix, Tesla, many of these stocks that are technology related, and the subset of people investing in them are more likely to understand Bitcoin. If many of those people do start moving into Bitcoin, then that's a positive. So what we kind of have here is a win neutral scenario, where if the stock market crashes, we have people from the tech stocks moving into Bitcoin, and perhaps some of the other people from other stocks moving into Bitcoin through a new ETF, for example. And many of the people that don't know what Bitcoin is are just going to kind of leave. But the thing about Bitcoin also is that we don't really have a negative here. We don't really have a loss for that win neutral scenario, because so many people have already left Bitcoin from $20,000 that the only people left are the people like you watching this video, sitting on your computer or your phone, watching me talk here for the last 15 minutes about Bitcoin doing something over the next year. You guys, me and you and me, me and you and me, we're not going anywhere. We've been here for the last 14 months, the last 15 months since Bitcoin hit all-time high. For some reason, we're silly enough to still be here because we can see the forest through the trees, and we see where Bitcoin is headed over the next 20 years. We see what's going to happen when Bitcoin goes back beyond all-time high, when people start adopting Bitcoin, when the institutions start moving into Bitcoin, when we start seeing retail interest come into Bitcoin again in droves. We see what's going to happen. So if a global stock market crash happens, or a U.S. stock market crash happens, if a financial crisis happens, if anything bad happens in the traditional finance markets, I don't think that's necessarily going to drive a bunch of people away from their Bitcoin. I really don't think that would have as negative an impact as many people entering the Bitcoin market from crashing stocks. I think that in general, Bitcoin is going to be a good hedge against the stock markets moving on into a recession. I don't necessarily think it's going to drive Bitcoin to the moon, but at the same time, I do think that a stock market crashing, with the stock market crashing and a stock recession, would actually be a good thing for Bitcoin, and would actually drive a lot of investors to Bitcoin in a similar way it drives people to gold. Now, I've laid a lot of things out in this video. Feel free to watch this video again. I've laid out a ton. We're going to be talking about this some more moving on into the next several months as a recession becomes more and more likely. Right now, the stock market's looking okay. We've seen this very healthy bounce. We're definitely not anywhere near DEFCON 1 right now. We're like DEFCON 4 at the moment. But we need to keep an eye on it. We need to keep talking about this because it is very important to understand what's happening in traditional finance markets and in the global economy so that we can use that information and apply it to what may happen to Bitcoin. Anyway, guys, I've rambled on enough in this video. Tell me in the comment section down below what you think of that analysis. Do you think that a global financial crisis would be good or bad for Bitcoin? I am inclined to believe that it's going to be either neutral or bullish for Bitcoin, considering how much bad has already happened to Bitcoin. I don't think anything can really shake Bitcoin's foundation anymore if it's not in the fundamentals of Bitcoin, be it if Binance gets hacked or something, then that'd be really bad. If the United States bans Bitcoin or something, that'd be really bad. If the European Union pulls Article 16 out of their butt and says that Bitcoin no longer exists, then that would be very bad. But unless we have something like that happen, then I don't think we're going to have to worry too much about a stock market crash affecting Bitcoin in a bearish way. Tell me in the comment section down below what you think about that. Guys, we do have a sale coming up on this Cryptocurrency Technical Analysis Academy in the next couple of days. It's going to be on February the 14th, and there's going to be 5 new videos dropping in CT2A. I haven't recorded all of them, but I do know which ones I'm going to record. If there's a video you really, really, really badly want to be in the Cryptocurrency Technical Analysis Academy, perhaps you're saying, I want to join that course and get that 6 hours of content and learn all about technical analysis so that I can go out there and be an awesome technical analyst and understand how markets move so that I can then make a ton of money and make back my investment that I made into CT2A. If there's a video like that you want in the course, tell me in the comment section down below, because I have before put videos in the course specifically based on viewer requests from the channel and from people already in the course. So tell me if there's a video you really want to see down in there, and check the link in the description to see the 20 videos that we already have in the Cryptocurrency Technical Analysis Academy. I'm very happy with the product, guys, and it's always getting better as I continue to add more videos. Check that out. It does help out the channel when you guys join that. It does help out a lot. Anyway, guys, that is basically going to do it for today's video. I do want to thank each and every single one of you for watching as always, and I will see you guys in the next video.